Okay, that's a lot of time for you to get information on the market as you sit in a trade. The 1 minute chart moves too fast and will print too many false entries. If you're under PDT, you will run out of buying power without a doubt every single day. So here's an example of a 10-minute chart. We can see the stock breaks above the pre-market high and comes down and perfectly retests this. Look how clean these candles are. Look how picture perfect. It doesn't get, look how clean this pre-market high retest is. It's super, super clean. It's soothing to the eyes. Now here's the 1 minute chart. So you want to trade the 1 minute chart because you think you're an elite scalper. Okay, so here's the pre-market high. You don't get a retest for it, but you think that there's a little bull flag here. So what do? You enter long just to get stopped out. Okay, then you re-enter on the reclaim to get stopped out. And then all this action under here, you now think is a bear flag. And what happens? The stock just rips higher. So let's compare the two next to each other. 10-minute chart, clean entry retest. You thought this was a bull flag right here, only to get stopped out. Now it's under the pre-market high, so now you take it off your screen, only to miss all of these gains. When at the 10-minute chart here on the left, you can see retest and literally made you money for 1, 2, 3, 4, 5, 6, 7, 8. 80 minutes you made money for it. Every time you looked at your brokerage for 80 minutes or almost an hour and a half, you made money. Meanwhile, with the 1 minute, you had your foot in your mouth and you're just kicking yourself in the head because you missed all of these gains. How do we identify our entry signal? Remember the LE model. So first, the LE model, the L in LE model is a retest level. So in this example, we can see on a bullish case, previous day high retest right here, comes up, forms a nice little flag, and then rips higher. On the contrary, on a bearish retest, you can see previous day low, it comes up to test it, forms a nice little bear flag right here, perfect retest, and then flushes to the lows. LE model, levels first, and then EMAs. Reminder, if you think back to my previous video where we discussed range breaks, okay, this is what a previous day high retest looks like. Remember, so it's breaking out of the previous day's range, so therefore it is a bullish trend. This is as bullish as it gets. On a previous day low, it's breaking below the low of the previous day candle, therefore the trend is bearish. Now, I think I forgot to mention that my pre-market high levels are always dotted. And why are they dotted? So this helps me mentally, where I know that pre-market highs are from the after hours action. Okay, so it's relatively low volume, so they're not going to carry as much weight as, say, a previous day high. Okay, because a previous day high level, these levels up here, are going to have more volume because it contains all of the day's actions of the previous day.